Welcome back to F.A.C.E, Tavi.
Hey, coach, can you hear me well?
Can you turn it up just a little bit, bro?
Yes. Hold on. Does that improve or not?
A little better. It'll work. So are you planning
So,
on sharing your screen today, Tavi? Or do you want me to share mine?
no, I don't have anything here on my
Okay,
screen notes today.
I'll share mine and we'll run over the board. What I'd like to do initially is congratulate you. This will be a nice little, promo for you on your
Mm,
great March,
thank you.
that you guys took advantage of it. I've talked to you, two or three other times now, Tavi. You're becoming kind of a regular here.
Well, it's always a pleasure talking to you, and thanks for the introduction.
Yeah, so you guys were bearish. I mean, I said you're not the average bear because you're not always bearish. So
Mm,
the average bear is always bearish. Permas, you're not
mhm.
perma, but it's one thing to make a profit. It's another to take it. So why don't you tell us on how you managed your profits on that COVID crash, and are you still maintaining that position, or most of those positions? I'm sure were short or bearish positions during this recovery, and has the magnitude of this recovery, say in the S&Ps, surprised you?
It certainly did, even though I think it's the beauty of having a portfolio that is composed by a lot of ideas rather than one or two. And we've always had a strong view about precious metals. And I think it all comes down to not having organic growth in the economy. Back in March, the shorts did really well, and our gold positions and precious metals
Yes.
positions actually didn't. And it
Yeah.
was fine. That was what offset and the performance and really drove the strong performance for the first quarter. For the second quarter, believe it or not, we were net short the entire quarter. The only difference is that we allocated to more asymmetric bets in the precious metal side by buying a lot of the drill stories and very junior exploration stories, and those took
Interesting.
off. We've been taking some activist stakes in some of those drilling or drill stories right now, and it's for us. It's been great. I mean, we've partnered with geologist Quentin Haney, a world-class geologist, and it's been very helpful to look for the best opportunities in the industry, as we believe this is a one in a lifetime opportunity. I call it. There was the big short. I think this is the big long.
Okay, so I'm showing gold up here. Actually, Tavi, I'm looking for a short next week. I think it's pretty crowded, but long-term trend, you can't argue it. Okay, this is tactical.
Yeah.
So it's interesting you bring up. People think that okay, if you're bullish gold, I just go out and buy a miner, but it's a whole universe within the mining sector. You have, mature producers that would be like an IBM in the gold space, and you have royalty companies, and you have exploratory companies, and um, normally they're later stage in the market because price has proved that, gosh, if we hit a nice vein, this is going to be a big winner, this deal. So do you think we're in that state where, let's face it, compared to Newmont, some of the things you're talking about are on the higher end, maybe even the highest end of the risk spectrum in mining?
Look, I think the entire industry looks attractive. However, answering your question, since the March lows, what we wrote about calling the blood on the streets was in the mining stocks. If you
It
actually look at,
was.
yes, if you actually
Here,
look at
this was
those,
it. This was the COVID crash in GDX.
yeah. Well, and what's interesting about this whole thing is that usually investors tend to put more capital to work in the companies that are bigger and more famous companies, the Barrick and Newmont and Kirkland's of the world.
Right.
And certainly that was what happened back in March and April. But now, as you see the whole industry starting to work, and more investors are kind of heating up to the whole industry and understanding that if there is no organic growth, then we'll be relying more and more on monetary and fiscal stimulus, or I should say monetary stimulus to fund the fiscal stimulus more and more often. I think what we're going to see is inflows towards the entire industry. And if there is one part of the industry that is absurdly undervalued, in my view, is the junior exploration side of things. And it does require some level of knowledge in the geology side to navigate that part of the space. But even the junior producers, which are the smaller ones that just started their production recently, those are the ones that you can find trading at 5-10 times free cash flow yield, or I should say times free cash flow, which is absurdly different from tech stocks trading at 30, 50, 60, 70 times sales.
Great point.
And I think the mining space is where you find growth, and it's not in the tech companies. The tech companies actually are cyclical, and earnings are supposed to drop by about 20% this quarter. Miners, on the other hand, not talking about earnings. If you look at free cash flow, it's supposed to double this quarter. That never happened in this whole industry. So I think that's where the level of opportunity is ahead of us still.
Where's break even on production costs nowadays, Tavi, in gold?
That will depend so much on the company.
On the mine,
It's not. That's going to be a very. I think it's might be even misleading to mention that, because every company will have a different break-even point. But a lot of those companies already make money at 1,500, 1,600. Significant amount of money in those levels, with gold prices at those levels. What's interesting, though, is that we're seeing a huge divergence. Usually, gold prices actually follow the capex cycle of the industry very closely. In other words, as gold prices rise, you would expect them to be spending more. But in this last 2 to 3 years, we're seeing a divergence in those. In other words, the capex actually in aggregate of the overall industry is not rising in the same level as gold prices. It seems to me miners are very scared that this is another 2016 environment in which gold prices begin to rise, and then we take another break for another 2 to 3 years, and capital completely dries in the industry, and a lot of companies go bankrupt. But I'm afraid that's a very different scenario today, and which means I think gold prices are going to lead the way, and silver prices will probably go exponentially higher in miners. And if that's the case, I believe margins and fundamentals will follow along for the miners, and we're going to see an appreciation for the entire industry.
Any interesting silver issues that you guys are committing to?
Issues, you mean in a bad way or in a good
shares?
Way? Yeah, I think
mainly
there's
a silver miner instead of a combination pure silver.
It's very difficult, as you know, to find a pure silver miner. And given all the fundamentals for silver today, it sounds very appealing to look for those. We are actually focused in a lot of silver new discoveries, as I believe that the overall industry will be looking for new discoveries very soon, and those companies sitting on large silver deposits will be in a very interesting spot in a few months or years. So we've been disclosing a few activist deals that we've had recently. I mean, Condor Resources would be an interesting silver related deposit, or Eloro.
Symbol, please.
Oh, it's such a small business. It's
okay.
It's
bulletin
like
board?
10-20 million. Condor Resources, like CN, Space CN, so it's in the Canadian TSX exchange, or Eloro, which is in Bolivia, is another perhaps could be a world-class silver deposit in a few years if proven correctly. And again, those are all speculations on what they have in terms of precious metals in those properties. But at the valuations that we're paying today, we're essentially buying just the property and guessing if we have silver or not underneath, and using the expertise of a geologist. I think that will be it takes you to a different level of conviction on the investment.
How about geographic risk, political risk? I know a lot of people at times, because there have been time periods in the history of this business of mines being nationalized, and I was wondering if there were any areas, if the mine was located in that country, that you would avoid.
Yes, I think that that's a huge point, even though it cuts both ways. There's a negative part of the unsafe jurisdictions, but also they come with, number one, with the discount, and number two, a lot of the miners that have production outside of the US is one way to be long gold against the most overvalued currencies in the world today. And I'll elaborate on that. The companies that have production outside of the US also have significant FX exposure. So as you see the depreciation of emerging market currencies, it tends to boost the margins of those businesses as their cost is actually priced in FX in an emerging market currency. So that's just another way, as I said, to be long gold versus the most overvalued currency. So you have miners in Argentina, Brazil, Bolivia, Colombia, Africa, and those are all areas. Even Canada, as we've seen, the Canadian dollar depreciating versus the dollar in the last few years, and that's all very positive for those businesses.
So actually, that's interesting. A strong dollar actually works in favor of these companies you're talking about.
We're talking maybe different in different terms. I'm referring to a strong dollar relative to the other currencies. I think
Right.
we're in a race to the bottom for all the fiat currencies and
Right.
globally. But I think the dollar is fundamentally better than any other currency in the world today, and therefore, if I believe the other currencies will depreciate faster, I think that that's going to help a lot of businesses that have FX exposure in terms of cost.
Okay.
And I think that that's all, along with gold and silver prices going higher. Number one, I think for you to get it right in terms of the mining space, you got to get it right on gold side and silver side. Otherwise, everything is wrong. So the whole thesis and the premise of the thesis it really is, can we see organic growth? If we do, if fundamentals improve on their own without any need for monetary stimulus further, I think that will change the entire environment against our thesis. I really don't think that will be the case. Miners just had their best quarter ever, over 44% above the S&P 500, 30% above NASDAQ. I mean, tech stocks are on fire. If tech stocks are on fire, miners are on absolute fire, and over 20% over Bitcoin. I mean, I couldn't express enough how bullish we are and how we think this is just the early innings of this movement.
Sure. Plus the total market cap of all the things you're talking about is probably one day's trading in IBM.
Yes.
So it doesn't take as much money to go through that garden hose or even a thin, straw.
Yeah.
For that asset class to perform. Probably
Yes.
not even. Is that true? You've noticed that too, right?
Yes,
So,
I'm guessing you. Yeah, go ahead.
so they're saying that like about uranium. If you look at gold shares and their market cap, of all of them, that uranium space is even smaller. You have a view on uranium?
I do. I think most commodities, especially the ones that are not cyclical, are heading higher in the following years. And
Okay.
in my view, it's also a major reason why we haven't seen inflation. It's quite difficult to see inflation rising when you have commodity prices in a depression, which was the case for the last decade. I strongly believe that the following decade will look quite opposite. Regarding your other point about the size of the industry, you're absolutely right. And I think you're referring to a chart that I produced a few weeks ago, talking about Apple being 3 times the size of the entire precious metals industry. And that's including mining businesses and service businesses in the industry too. So, the overall industry is worth about 0.7% of the global equity market. So like you said, it's not necessarily a lot of capital to move this industry a lot higher. And it's the only industry that I believe that truly benefits from this environment that we're seeing of money printing and fiscal stimulus to eternity.
Any COVID risk that you see, Tavi? Miners get sick or, shutting down mines because of that. And, probably wouldn't happen in Brazil, your home country, because the president wants business as usual, like the U.S. here. So But is there any COVID risk or effects on the mining industry?
Well, absolutely. I think the virus is truly the uncertainty that we're if you deal with the markets, as you know, uncertainty is part of the game. But the coronavirus certainly is a type of uncertainty that who knows what's going to be playing out in the following months and years along with this virus outbreak. But I think that's all relates to the constrained situation with the supply of gold and silver that has been already constrained for so long. I mean, just for the average listener, I mean, for a normal miner to get a permit to start mining, it takes you at least 5 years. So, if we don't get those companies starting to mine anytime soon, especially silver, we're going to be on a lack of supply here very soon. Copper is in the same scenario. Unfortunately, it's such a cyclical commodity, but gold and silver supply is extremely low, historically low right now in terms of the new discoveries. And I think you're either looking for places where companies are actually sitting on valuable deposits, or you're just holding the metal because of the divergence between supply and demand. I don't think that supply, in terms of the demand, I don't think that's going to change anytime soon. Investors are looking for alternatives for the monetary system, and gold and silver certainly serve that purpose in a huge way.
Looks like you're a little negative on Australian housing here, Tavi. I'm showing your website here and showing housing credit. Are you seeing similar things across the globe, or is this Australia specific? Could it happen in the U.S. again?
That's a really good question, because I think it all relates to our views about China. And we've had a very negative view on China for some time now, which relates to the size of the banking system relative to the GDP that is, in our view, largely inflated. And I believe strongly that the Canadian and Australian markets are highly linked to the Chinese economy, along with Hong Kong and Taiwan as well. And I think it's quite interesting when you see credit starting to disappear, or at least contract in an area where depends on credit growth so much, which is the Australian case, especially in the housing market. That is a market that is historically overvalued, as we all know, along with the Canadian housing market as well, which in our view, it's been exacerbated by capital outflows from places like China, and the elites of China getting money out of those places and buying properties where there's less capital restrictions, and also a much easier environment for you to allocate your capital versus the U.S. So, I think it's very telling when you have banks starting to, and especially also between the relations of Australia and China recently have certainly heated up, as you know.
Heating up.
And so I think that it's all related to this chart as well.
Okay, and we're only about 3-4 months away from an election here in the U.S. You may have heard of what's going to happen. Or maybe it's going to happen. We could have martial law before that happens. So anyway, I'm wondering if you guys are starting to factor in potential change or re-election of President Trump into your narrative.
That's a tough call, but I lean towards the side that certainly markets at record overvalue levels in terms of the NASDAQ, especially, which is a very cyclical part of the market. I think doesn't justify the risk of a Democratic Party taking control in a few months. And I think that there's a lot more to that. Personally, I just posted a chart looking at corporate taxes, for instance. I don't think the government can afford having corporate taxes this low, given, I'm a big fan of cutting taxes. However, I just don't think that the government is fundamentally strong to support such policy going forward. I think
you're looking for higher taxes no matter who is elected.
It's going to be tough to see Republicans doing that, I think. But it's again, it's another risk that is certainly not priced in the markets today. It's a very small percentage of the collection of revenues in Texas by corporations, actually by the government. However, it's certainly what moves a lot of margins for companies, and we've seen margins actually plunging recently. They have nothing to do with corporate taxes. Matter of fact, they have been helped by corporate taxes being lower. So I think that there is a case to be made on the bearish side here. That given the overvaluation of stocks overall, I think that there is a little bit of mispriced risk in the markets in terms of that.
How about yields? If you look at the yield chart for the last, going back to the COVID crash down there, it looks like an EKG of a guy in a coma, Tavi. There's your 10-year yield right here.
Yeah,
You have any view on, do you have any view on yields? They're going to be an important part of an overvalued market if they start heading up, which it would really be kind of very contrarian. Everyone's saying lower for longer. Does that mean new lows in 10-year yields and maybe even the 30-year?
So my view about yields is actually linked to my views about gold in the terms of, as the government is as we don't see organic growth and the government continues to have to do fiscal stimulus, in the Federal Reserve has to be the buyer of last resort here in terms of treasuries, and it so suppresses long-term interest rates. At the same time as you expand the monetary base, and that creates a supercharged environment for precious metals in general. Now, answering your question, in terms of the 2-year yields, I think it's something I have a higher conviction on. I believe that the two-year yields are likely to go negative sometime soon. And I think the biggest impact of that, aside from precious metals, will be on banks. You look at places like banks like Wells Fargo already down at least close to 60% year to date. I mean, that's the worst annual performance of Wells Fargo in its history. That's the 4th largest bank in the U.S. with over or close to $2 trillion of assets. So it's a significant, a significant company to be looking at in terms of problems going forward. So as you have low yields, record debt, and record valuations, I think it's going to be very difficult for us to see organic growth improving here going forward. So I think yields go lower, especially in the short end, on the front end of the curve.
Okay, so why don't we wrap it with this? And already want to thank you for a great conversation. But would
Absolutely.
you say, if you look at my charts here,
Okay.
that with the S&Ps in this position, and here we were before the COVID decline that Crescat capitalized on, are you making the same bets now
Mm-hmm.
in the market that you were making back then? Do you think are you reloading after this big recovery here with your bearish view of the economy?
Yes, we reloaded a lot back in March and April, and then added back after the move of 20-30%. We have a very big short position today. We think the sentiment is euphoric in a way. There's a lot of bears capitulating recently.
Yes,
We've had
plenty.
the entrance of Robinhood traders now trashing in-depth research and 10Ks and 10Qs and mocking Warren Buffett, and investors bidding bankrupt companies and saying fundamentals don't matter, while you have all the fundamental side, profit margins falling apart, capex is not improving. So again, I think that's there is certainly a divergence between economic activity and valuations, and I understand the market is supposed to be looking ahead, but I think that we've gone a little bit too far on this idea of a rocket ship recovery that I don't think we're going to see. I think labor markets are going to be weak for longer than most believe. And I think valuations has just put out a table looking at 7 different ways of looking at valuations, and pretty much all of them are very close to all-time highs, and that's using Q1 numbers. The Q2 numbers are not even out yet. I think that's going to look abysmal, and probably going to be one of the worst ones in history in terms of multiples overall. So I think that there is a case to be made of buying gold and selling stocks to continue here going forward. And we've been adding to our shorts after a very good month and quarter for the precious metal side.
Okay, so do you think we just correct this correction or advance, or that the March lows are going to give way over the next 12 months? Best guess.
I do. My best guess is that we're going to go lower.
Okay.
And I think there's there's some asymmetry to that. If you look for companies that are absurdly overvalued, most of them are in the tech space, in my view.
Okay. Well, Tavi, I really want to thank you for coming here and sharing your view. Very interesting take on miners and sectors within the mining group. And everyone, you could follow Tavi on Twitter at Tavi Costa, right here. I had you. There you are. At Tavi Costa. And you can go and check out his writings and his views on crestcat.net. So thank you, my trading warrior brother, and great to get some balance and your input. And again, congratulations on having a great quarter. But Tavi, you know, you and I have been around for a while, and in our business, you're only as good as your last quarter.
That is true.
Right, buddy? Huh?
I would say as your last month as well. But
and in my business, you're only as good as your last trade.
yeah,
Okay, so
you.
I wish you successful quarters, and why don't we set something up to talk again in the fall and see how things are playing out.
Sure thing. Thanks for having me. I appreciate the interview again.
Why wouldn't I have my trading warrior brother come in here and talk about speculative investments like exploration stocks and miners, okay?
Always happy to be here.
Enjoyed it, buddy. Everyone, thank Tavi for being with us. That's going to be a wrap for us today. We'll see everyone tomorrow for TGIF Friday. And don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios. Thanks, Tavi.
Thanks again. Bye.